because there's Microsoft as well today inking a deal with another cloud provider and bringing Dell into that deal as well.
Yeah.
What's that?
And NVIDIA.
And of course,
I mean,
and NVIDIA too.
All paths lead back to NVIDIA, which is supply the GPUs for all of this sort of cloud computing. But what's interesting here is IREN is an Australian company, but actually has significant
IREN, that's how we're going to say it,
and
IREN.
that's how we're going, amongst friends, going to call it.
That's fair, that's fair.
Send in notes if you know any are different. But IREN is saying that it's going to be offering its actual Texan-based compute. Remember, this is another example of a neo cloud that used to be a Bitcoin miner. You've seen that with Corp, you've seen it with some of the other players, Nebius over in Europe, and Australia has been doing the same thing. They've got big offerings here in America, and they're able to offer that out to Microsoft, which we know is not able to capitalize on the amount of demand because they've got a supply issue. We heard that from Amy Hood, the CFO, on their earnings as well. This is a company that's having to allocate more capital expenditure. They're building out their own, but they're also going to neo clouds more broadly. We've seen Nebius as one, we've seen Nscale as another, and now they turn to more access in America. So it's interesting that we're seeing Microsoft still having to double down.
Neo clouds are what we call, just businesses that don't have any other business besides cloud.
They just know how to run a data center efficiently, and then they go to a Dell and buy all of the equipment, whether it be the servers, the chips that go inside the servers. And we got some real detail on the numbers here. They're saying, look, I'm paying $5.8 billion, this is IREN, to Dell for the equipment. But then longer term, this is a more than $9 billion deal with Microsoft. You're starting to understand some of the margins, some of the operating costs more broadly.
Elsewhere, more debt. That seems to be the theme, right? Have a deal with someone and take on more debt. This time, it's Alphabet. It seems like it's both European markets and U.S. markets that it's tapping, but this is a completely different model for these tech giants, isn't it, to do so much of the growth in CapEx through debt?
Because usually it had been their own money. And actually, there's that $3 trillion figure out there coming from Morgan Stanley. And look, we're awash with numbers, so it can be hard to really understand. But $3 trillion is what Morgan Stanley thinks is going to be needed to roll out the AI data center spend to 2028. They think about half of that's going to come from these companies' cash flows, but the other half is going to come from interesting financing, whether it's Blue Owl that we see Meta turn to, or whether it's the debt markets, which Meta tapped $30 billion worth of last week. But now we see Alphabet go for 3 billion euros over in Europe. They already did their first European sale at the beginning of the year, and then they're tapping the US markets as well. And look, interest rates have been coming down a bit. This is an interesting way to continue to show your commitment to growing. And of course, remember, Alphabet, we rewarded for spending more on their compute last week. We're seeing the growth trajectory for Alphabet and for their Google offering.